the key thing with buying real estate is you make your money at the purchase. You've got to buy it right.
I think that's something that's really important is people understanding how they get their deal flow. Whether you're investing yourself, trying to find your own deals for your retirement account or your non-retirement account dollars, or you're investing with other people, do they have a competitive advantage? Welcome everyone to the Directed IRA podcast. I am in studio with Jamison Manwaring. I am on an away game. Okay, I'm on Jamison's home turf, but we were over recording on his podcast, the Kiss My Assets podcast, where I was a guest. I'm like, dude, we're sitting here. Let me just do a podcast, and I want to interview you. So thanks for being on the Directed IRA podcast.
Yeah, really excited to be here. I love home field advantage.
Yeah.
And brought you over here. I was in your studio last time, so glad to have you here today.
It's fair. That's how it works. You have an away game, a home game. We kind of split it up. So, well, I want to talk about self-directed IRAs and real estate. I mean, obviously, we're on the Directed IRA podcast. What are we going to talk about? But the reason I want to talk about it with you right now is you have had over 1,000 investments from people using a self-directed IRA, their IRA 401k money, to invest in real estate. So why don't you just tell us about Neighborhood Ventures and what it does and why people are even using their IRA to invest with you guys?
Yeah, we launched Neighborhood Ventures 6 years ago. In that time, we've done 19 total investment offerings.
Okay.
15 of those are individual properties, which are done as syndications, is what they're kind of referred to historically.
So meaning like an investor goes in on that one property.
Correct.
Okay, so you like market, this is the property, and these are multifamily.
Yeah, we're doing all multifamily. We do it a little different because we do everything online. We're a investment platform, and we use crowdfunding laws to enable this.
Yeah.
And so each of our investments has a lot of investors compared to a traditional syndication. So we're in the hundreds every time. 200, 300 investors in each of our projects. We've also done a couple of funds.
Yeah.
And we have one fund currently, and then we also have a REIT, NV REIT.
Yeah.
Which is kind of our flagship fund now as we've done these individual projects. And what we have found is our investors have found us, and many of them had already discovered the ability to self-direct their retirement account. Some of them come to us and we've educated them about that opportunity, and we've helped them facilitate that with your company, Directed IRA, so that they could create those accounts. But there are so many tax advantages to using retirement accounts, and we initially learned a lot of that from our investors, and we saw how many of those investors were doing it already.
Yeah.
And so it's certainly caught fire for me personally and across our investment base. We try to get as many of them to understand it, and so that they can utilize that as possible.
Yeah, I mean, I think one of the things that's interesting about what you guys are doing is, I mean, you're working with a lot of everyday investors. It's not like you're going to the family office or the uber wealthy to go get $1 million check or something. I mean, you guys are raising on, and it could be $25,000 minimums. I think even in your crowdfunding stuff, the minimum is $5,000 or
yeah. So our REIT is $100 per month minimum. We have a lot of people who put in $500 a month on the 15th of every month, and it's automatic. We have big investors as well, but we have your everyday investor. When we created the company and founded it, and I came from a Wall Street background. My clients were hedge funds and mutual funds, and I didn't want to spend any more time.
Jamison worked at Goldman Sachs. He doesn't like to say that out loud, but he works on Wall Street for the evil empire.
Depending on the news of the day, that's a good thing or a bad thing. But I was talking to hedge fund managers who were trying to take their $1 billion fund and get a 20% return on it. And when we launched this company, I knew that I wanted my customers to be people who were like me and like my family, that were entrepreneurial, working hard. So we opened it up to everybody, not just the wealthy. So we have wealthy investors, we have everybody in between. And our offerings are structured that way so that everyone can participate in this great asset of multifamily.
Yeah, and I think that's great because a lot of people are interested in investing in real estate, whether they're using their IRA or not. And one thing with Neighborhood Ventures that I thought was just so unique is that you guys are approachable in that way, where it's like, oh, I got $1 million to deploy. I got 10,000. You know, I mean, your team will talk to either one of them and kind of go over the deals and what you have available. And there's opportunity for everyone. They don't have to be an accredited investor necessarily either, right?
Yeah.
So, so I think that's pretty cool. And I remember one of the first times I came over here to your guys' offices, you guys had like a little get together with some of your investors, and like a lot of them like have like been to the properties that you guys have bought, and they're like, we got to talk about the countertops that we were going in the remodel. I mean, right? Do you still do that?
Yeah. One of the things our investors love the most is our open houses. So when we go buy a property, we remodel it and we do an open house so all the investors can come and see what they're investing in. And one of the things that I learned both with my own investments and as I worked with our investors and investors in general is the more access you can have to where those dollars are going, the better you feel about it, the more you understand it. And the beauty about real estate obviously is it's tangible, but a lot of times when you're investing in a REIT or a big syndication or fund with real estate, you have no idea where that money's going. So we want to keep it to where our investors can go and drive by the property, and there's just something fun that about that.
Yeah.
And so our open houses are a big thing with that, and we've also got a lot of good feedback from our investors. So one example is we're in the process of converting a hotel into an apartment building. We're in the final stages of
You guys
this
are getting
with
some
the city
local
of Mesa.
press on that.
Yeah. We
been kinda cool.
Arizona
I've been signing
Republic
it.
just did an article about it, and you know, housing is a big shortage right now, especially affordable housing, and we're in the process of converting a hotel that was a blight of a neighborhood and had multiple calls to the the city of Mesa police a day. We bought it. We've those calls since we bought it have basically gone to zero. We're operating it still as a vacation rental, but we're converting it to an apartment building. And we had over 300 of our investors sign a petition, as well as a bunch of the local community sign a petition that we sent to the city as we applied for this rezoning. And for us, that's a big strategic advantage that we have local investors and stakeholders who are supporting this, because that matters a lot to the city when they see that.
Yeah. And plus your partner, John, I mean, I know you had this career on Wall Street. You go to be LifeLock. You were an executive there. And I remember you telling me your story before is you were the money you're making on Wall Street or in corporate America, you were buying real estate, right?
That's right.
Right. And like, that's where you were deploying that capital despite being in that space every day, which I think is so interesting. And then your partner in the space too, from the real estate brokerage side, right? And you were telling me about him too, that he, like, the brokerage is like they sell more multifamily assets in the Southwest than anyone.
Yeah. So I met my co-founder John Kabrowski when I was actually looking to buy a building myself.
Yeah. Okay.
One of his brokers showed it to me. And I told him I was really interested in crowdfunding it. And he said, well, my boss talks about crowdfunding all the time. And I said, what's his name? He said, John Kabrowski. And I just jotted it down, and I sent him an email a few days later. And we ended up meeting, having this long conversation, and decided to partner together to create Neighborhood Ventures. So John spends about half of his time running ABI Multifamily. They're the largest apartment broker in the Southwest.
Yeah.
They sell more apartments in Arizona than anyone. And about half of his time working with me at Neighborhood Ventures, and we're here in the same office, which helps. But we're able to source our deals from ABI Multifamily. And just to help people understand, when you're selling an apartment building, most sellers would prefer to sell it off market.
Yeah.
Rather than have to put it on a multiple listing service or to list it with a broker and have people doing tours. They would rather sell it directly. So I would say 80% of the properties that we've purchased have been off-market deals directly with a seller. And now we are also seeing direct deals from banks that we have relationships with and that ABI has relationships with, that they've taken back on some of these deals.
Yeah.
And we saw some buyers for apartments come in and buy them at the top of the market in 2021, 2022. They got them at 4 or 5% interest rates, and now those rates are at 10 or 11%, and they've reset, and they paid top dollar for them, and they're not in a position to try to service that debt going forward. And we've launched our fund, Arizona Multifamily Opportunistic Fund, to go buy some of these distressed assets.
Yeah.
So the key thing with buying real estate is you make your money at the purchase. You've got to buy it right. You've got to buy good real estate, but you've got to buy it right. And if you want to have a good return, then you have to manage it well and you have to sell it at the right time.
Yeah.
But if you miss the first one, if you buy it wrong, it's really tough to recover from that. So that's our main principle as we look at buying our assets and taking them, either putting them in our REIT or offering them to our investors, is ensuring we're getting a really good deal on them.
Yeah. So right now, I know one of the things you have is a distressed opportunity fund right now that you guys are raising for, looking for those distressed opportunities. And I told you even before I came over here this morning, I was talking to another relationship of ours that does multifamily syndication. And, he's had some tough deals. He's had some good ones and bad ones. Some he's had to work out. But he said, man, I wish I was in the position to just acquire more deals right now, because the rates out there right now with what you have to pay, if you can make the deal work now, he's like, that deal's going to be awesome in 5 years, because I could likely refinance, get a better rate, and I'm going to look like a genius in 5 years. But you have to buy right? And so I think for a lot of people using their self-directed IRA, whether you're doing your own real estate deal, right, or you're investing in someone else's deals, is you've got to buy right. And I remember I had a client of mine that was just a flipper in Southern California. He'd flip houses and did hundreds of them. When I say just a flipper, I mean he was doing very well. Okay,
Yep.
He's a great dude. He used to always say, he's like, you make money when you buy, you realize the money when you sell.
Right.
And so he's like, if I knew what type of money I could make when I bought it. So what are you guys specifically looking for right now as you're buying? That may maybe be helpful to other people that are looking to invest either with you guys or doing their own real estate purchases and investments. Like, what should they be looking at right now?
So the big thing that we're looking at right now from a macro point of view is what's happening with interest rates, which has a big impact in the value of apartment buildings and commercial real estate. Sometimes not so much with residential, but with commercial, it has a big impact because you're dealing with sophisticated buyers who are always putting debt on almost always putting debt on buildings, and so the cost of that debt has a lot to do with what they'll pay for a building. And we know that we're at the peak of where interest rates are most likely going to go. The Fed has said rates might be higher for longer, but they're already in a restrictive territory, and so going forward, they are going to keep them in a restrictive territory until inflation gets to where they want it to be. But the outlook over the next 1 to 4 years is interest rates are most likely going to go down. That's the bet that we're making.
Yeah.
Interest rates, if they go up a little bit, go out from here, it would likely be just incrementally, not a lot. They're most likely to go down into more traditional range. And so when interest rates go down, the value of real estate will go up as those rates come down. There's an inverse effect, kind of like with bonds. As interest rates go down, real estate tends to go up, and as rates go up, value of real estate goes down. So we expect interest rates will move down over the next few years. If you can purchase good real estate right now at a discount from some of these situations where the current operators are not able to service that debt, I think right now is a rare opportunity. As a younger guy who was not in the business during the great financial crisis, right now is the best time to buy real estate in the last 15 years. This is kind of the first time we're seeing an opportunity like this. So we are raising capital to go buy these assets. You have to have the capital ready right now because the best assets that you have access to, you have to close quickly. Sometimes it's in a week or two.
Yeah.
So you have to have the capital ready, dry powder. And we want to buy assets in core neighborhoods. So we're not buying stuff out in the tertiary markets. We want to buy stuff near mass transit, near employment centers, core areas, and in those core locations. And we're looking to buy stuff at least a 25 or 30% discount to where we think it would be normally in a normal market interest rate environment. And we're seeing those deals. They're not hitting the general market, but we are seeing those deals through our relationship with ABI and these lenders.
I think that's something that's really important is people understanding how they get their deal flow. You know, whether you're investing yourself, trying to find your own deals for your retirement account or your non-retirement account dollars, or you're investing with other people, is do they have a competitive advantage? Because on the one hand, you could say, well, I'm still going to invest because I believe right now is a good time to buy just from a macro standpoint, like you explained. Like it's just a good time to buy because the market in general is discounted because of where rates are at. And so I think there's good reason to do that, right? And you could buy into that philosophy. But even better, if I can get the better deals within that general market where there is some distress or there is some reason I get it at a better deal than the property next door that's not distressed. And so I think when you get that, now you've really got an awesome investment opportunity.
And that's where we're at. We're a little picky right now because we have such good deal flow.
Yeah.
We have friends who have bought some deals that we've looked at in the last 6 months that we passed on, and they're someone else buys them, and that's great. Good luck to them on that, and maybe they'll do well. But we're more picky because of that deal flow, and we know what we want, and we feel like there is going to be a window here in the next 1 to 2 years as interest rates stay higher for a little bit longer.
Yeah.
There's going to be some distress. It's not going to be widespread. I would classify it more as stress versus de-stress. There's going to be a few folks and a few deals that come up that are going to be these really unique opportunities. So you have to have the capital available, and these are the times that you want to go buy as much as you can these good assets and these good locations.
Okay, cool. So I want to talk about the REIT, though, that you have too. So you have NV REIT, Neighborhood Ventures REIT. That's not Nevada REIT, you know. There's we have Dakota REIT. That's another the relationship we have. And I was like, okay, Neighborhood Ventures REIT. Just want to make sure everyone gets that. That's the NV. And tell me what you're doing with that right now. We love the REIT structure for IRA investors in particular because they don't have to worry about UDFI and all that. They're automatically exempt from that. It's just kind of clean and easy. I don't think UDFI is a bad thing in other funds in general. I just haven't seen clients have to pay a lot of tax. And if they do, they've usually gotten an excellent return. So that's a little unique issue. If you don't know what UDFI is, there's a chapter in my book on it. We got other podcasts specifically about that. That's a unique IRA angle on the NV REIT. But just from an investment perspective, why did you come up with NV REIT and how are you using that right now?
Yeah. Kind of the simple version is we had several properties that we really liked that we had put low fixed rate interest debt on it. And we didn't want to sell those properties.
Yeah. But you had investors that were like, hey, you told us we were going to be in this for 5 years or something.
Yeah, exactly.
Like, we're waiting for our money to come back.
That's just it. So typically we would go sell those, and that was the expectation from our investors. So we decided to launch NV REIT so that we could hold these assets for a longer period of time and give our investors liquidity through the REIT structure. They can let us know if they want to redeem shares, and then we're continually raising additional capital so that they can cash out on those shares as much as they want.
Yeah.
And so we launched the REIT last year. Our net asset value price is $100 per share. Right now, it's a 5% dividend yield on that 1% or on that $100.
The annual rate, and you pay that quartly or monthly?
We actually pay it every month,
every
10th
month?
of every month. And we have some really exciting things happening this year for kind of REIT nerds. There are many advantages to having a REIT. One of them is called an UPREIT. Yeah. Where you can take assets that you currently own and bring those assets into the REIT tax deferred.
Yeah.
We're going to be doing some of that this year for those properties that have low fixed rate loans. Those properties are performing really well. We love them. And rather than sell them to somebody who's going to have to get debt at 7%, we have 3% that stays on the property. And that's going to be a big advantage to our REIT. And then the other big aspect to the REIT is when we do sell these buildings, we can do a 1031 exchange and go purchase the next building. So there's many aspects to the REIT that give investors an advantage. Yeah. And the way that we split that out is 80% of the upside to the value of the REIT goes to our investors. 20% we keep for managing the fund. So it's a 80-20 split, which is very aggressive for the investors. And over time, and especially as we look out over the next few years, I think that rents are poised to perform very well. We know that there's a shortage of housing, and there's right now there's a big disparity between what you're paying to buy a home versus what you pay to rent a home. The biggest in 40 years. So over 50% more expensive to own an equivalent property than to rent it. Yeah. But over time, that gap is going to shrink. Yeah. And rents are likely to move up over the next 5 years as this new supply of apartment buildings that have come on the market over the past few years, that supply is starting to go down as we look at the supply, and we think rents are going to move up over the next 5 years pretty dramatically.
But I think, that's just an interesting point right there on the shortage of housing and the spread between price of home ownership versus the cost to rent. I think if you're a landlord in general, whether you own single-family homes yourself or in your IRA or you're investing multifamily where it's a little more on steroids, I guess here is, if rates come down, that's good for you because you can refinance your debt and you can save money there. It makes homes more affordable, which narrows that gap between rent to home ownership, which makes your rent increase a little less powerful. But if rates stay high, no big deal. That means the rents can go up more. It's more likely they'll go up because the cost of home ownership is up. So you kind of win either way, I guess. And either way it goes, if the rates stay high, the rents are going to continue to grow, definitely not fall. And if they go down, that helps you to refi your debt if you need to, if there's a better rate.
No, you're hitting it right on the head. There's so many advantages to being in multifamily as an owner because of the optionality. Yeah. And to your point, if rates do stay high and the cost of housing does stay high, rents will come up to hit that equilibrium of what it costs to buy a home. And at the same time, if rates do come down, then you can refinance your debt and the value of your building goes up. So, and one of the things that we learned during COVID was when people have tough financial times, they pay their rent first. Yeah. And so as I look at all the different asset classes, I love multifamily because and we see this on the first of the month, people get their statement to pay their rent. They don't pay their rent on the 7th and the 8th. The first of the month, we see hundreds of thousands of dollars come in because people are paying their rent. They know that needs to be paid first. And the optionality, to your point, in a good market, if economy stays strong, people can continue to pay their rent. Yeah. If the market gets a little tough and there's a recession, rates come down, and as an apartment owner, you benefit from that scenario as well.
Yeah. Okay, awesome. This is fascinating. So I could geek out on this real estate stuff forever, but we do have to end these podcasts. They don't go forever, and I've got to respect Jamison's time. So thanks so much. How can people learn more about Neighborhood Ventures, what you guys are up to? Where should people go?
Yeah, our website is a great spot because all of our offerings are displayed on our website. So crowdfunding is fun because it's very transparent. You can see all of our past offerings. You can see how many investors are in those past offerings. And then you can see our current offerings that are open. We don't have any individual projects open right now.
Yeah.
We just sold out of our last one. But we do have our REIT and we do have our opportunistic fund, which are open.
Okay.
You can see those. You can see which ones you qualify for. You have to answer a few questions. And then also our YouTube channel. If you just put in Neighborhood Ventures into YouTube, we have a lot of great education there for folks as they're looking at, should I invest in multifamily? Why should I do it as you start that process? So we try to do a good job to help people as you're making that decision, to be informed, to understand what you're investing in. And then, our events are a great thing. If you're in Arizona, you can come out to one of our open houses that we'll be having. We have a couple of those a year.
Okay, cool. And the website is, did you say it? I don't know.
Yeah, it's neighborhood.ventures.
Okay, neighborhood.ventures. That's right. And I've messed that one up before. All right, so neighborhood.ventures.
Yeah, if you just put it in Google, Neighborhood Ventures, it'll pop up.
Okay.
Because it's a unique name, which is good. But
yeah, and you can find Jamison. He's an influencer now. I've seen your following's grown. You've got a pretty good following now on social media.
Keep up with you guys.
Yeah, I'm trying it too. I'm trying to be an influencer. Trying to be a YouTuber. So, but anyways, thanks for being on. This, of course, was not like an endorsement of any investments. We don't do that at Directed IRA, but I just think Jamison's just a smart guy to tap into his knowledge about real estate. They've got a lot of great content and stuff you can learn from them. And we'll be back next week with another episode of the Self-Directed IRA, the Directed IRA podcast about self-directed IRAs. Until then, stay calm, self-direct on.